Crypto markets rarely reward the loudest project for long. They reward the project whose narrative arrives at the right moment. That distinction matters more in 2026 than at any previous stage of the industry. In traditional technology sectors, communications often follow product development. But in Web3, markets frequently move before fundamentals are fully understood. Capital rotates rapidly between themes, media cycles accelerate overnight, and narratives can reshape valuations before adoption catches up. As a result, timing influences visibility almost as much as execution. For blockchain companies, narrative timing has quietly become one of the most important strategic variables in communications. Web3 narratives behave like liquidity flows. They do not emerge randomly. They follow attention and capital. When liquidity concentrates around a sector, media coverage expands, social momentum compounds, search activity rises, and investors begin framing adjacent projects through the same thematic lens. The pattern has repeated across nearly every major cycle of the past 3 years. AI infrastructure, memecoins, restaking, modular blockchains, RWAs, DePIN, Bitcoin ecosystem expansion, stablecoin infrastructure. CoinGecko's 2026 market research shows narrative concentration continues shaping sector. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Performance across digital assets. Projects associated with dominant themes consistently attract disproportionate attention and trading activity. The strongest projects understand that narrative positioning cannot be separated from market timing. A technically strong protocol introduced during the wrong cycle often struggles to gain traction. Meanwhile, weaker projects attached to active narratives sometimes attract enormous visibility. The same story performs differently depending on when it is told. That's why timing is now a strategic asset in Web3. It's not just about having a good idea or building a strong product. It's about aligning that product with the right market psychology at the right time. This is especially relevant in 2026, when the industry is more mature but still highly speculative. Investors are not just buying infrastructure or utility. They are buying into a vision of the future that aligns with their current risk appetite. If a project's narrative doesn't match the prevailing market theme, even a strong protocol can struggle to gain attention. Narrative timing is also shaping how capital flows between sectors. When a theme gains momentum, liquidity follows. That liquidity brings more media coverage, which in turn brings more attention and more capital. The cycle compounds rapidly. A project that enters a hot theme early can benefit from this compounding effect, but if it enters too late, it may find the window already closed. This dynamic is not limited to a few projects or a single market. It's a systemic feature of Web3 markets. It's why some projects with weaker fundamentals can outperform others with stronger execution. It's why market visibility is often more about timing than about. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Execution. It's why blockchain companies are now investing heavily in communications and market timing. The next signal to watch is how the dominant themes of 2026 evolve. Will AI infrastructure continue to dominate? Will DePIN or RWA narratives gain more traction? Will new themes emerge from unexpected corners of the ecosystem? The answer to these questions will shape which projects attract attention and which ones fade into obscurity. For now, the most important variable remains when a project's story is told and how it aligns with the current market sentiment.